Good morning. This is Susie McCollom. I'm with Coldwell Banker in Newport Beach, and I wanted to welcome you to this little webinar that I am so grateful for my friend Cindy Kramer, who is a friend and a colleague, and she works very closely with us at Coldwell Banker and with other outside clients. She's currently VP of Mortgage Lending at Guaranteed Rate Affinity. And she's going to share this morning some of her thoughts on where we are in the mortgage and lending, because I know a lot of you have had questions about FHA, about credit scores. Has the mortgage lending industry changed their guidelines with all the new norms? So Cindy's here to give us some insight and a little more expertise on exactly, if you are considering a loan or refi, what to expect. Welcome, Cindy.
Thank you. Thanks so much for having me. It's wonderful.
So tell me, maybe we start with the easy, the FHA and the Freddie Mac and Fannie Mae, and where they are as far as their processing and what they're looking for.
Sure, absolutely. So those three types of loans are what they call government-sponsored entities. So the government, they're not loans from the government, but Fannie Mae and Freddie Mac have sets of guidelines, and then FHA has sets of guidelines too. You get the loan through a regular lender like myself, but we have to follow those guidelines. There has been some tightening of guidelines on all those sectors, mainly just to make sure the loan is strong and the borrowers are strong. We never want a borrower to get into a loan that they can't afford or are not going to be able to repay. So there has been some increases in required FICO scores. Some additional verifications are being required now, mainly for employment. There's so much unemployment going on right now, and kind of at the last minute, people who, a week ago who were employed and now are getting furloughed. So we're having to do a lot of last minute stuff, and that totally makes sense. We want to make sure everybody, of course, is still employed and are going to be able to make the payments on the loan that they're applying for.
So tell me, when we talk about those government-sponsored loans, what exactly is the benchmark for what kind of loan amount it applies to?
Sure. So for here in Orange County, those would be loans on all of Fannie Mae, Freddie Mac, and FHA. The maximum loan amount is $765,600. They always change it every year. So that would be the maximum loan amount. So any loan that you're getting within that guideline or within that tier is going to be usually one of those. Okay. Sometimes you can get a portfolio loan, but those are going to be the vast majority of loans out there.
And that would apply for actual investment properties as well as residents that you're actually living in. So it would apply, and just myself having recently been an investor, sometimes there's a little more uptick on the interest rates because it's not your primary residence.
Absolutely, and that's always been interest rates are usually based on what they consider risk. So there's always been more of a risk on an investment property. So those interest rates are usually higher, maybe a 0.5% higher or so.
Okay, so then jump into jumbo loans and the non-qualifying, which here in South Orange County is probably going to be the bulk just because of our price points of our properties. So I'm sure people are interested. Have there been big changes there in that realm?
Yeah, there has been. So several of the jumbo correspondent lenders are suspending operations right now for, a variety of reasons. Some just can't take the capacity at this point. Some have just decided at this juncture they don't want to take the risk. The non-qualified mortgages or the non-QM, what we call non-QM mortgages, a lot of those have also suspended operations. And those type of mortgages are usually what we consider, they're either non-full doc, so you've got bank statement loans for self-employed borrowers, asset depletion loans, no ratio loans, loans that can go higher in debt to income ratio.
So they're sort of out of the box.
Absolutely, absolutely. So again, those are the more risky loans. And so these lenders have taken a step back and have decided, hey, we're going to just kind of wait and see, because we don't know if we're going to be able to sell these loans at a certain time because they are a little bit more risky. I do have some avenues that still are providing these type of investments or these type of programs, but they've also increased their guidelines or tightened their guidelines a little bit as well. Again, just to make sure that the loan is as strong as possible.
So would it be fair to say that there are still loans available, but in that process, number one, it may take longer. The timeline in the past, I know for the average escrow closing could be 30 to 45 days, no problem. Today, it's expect longer. You may expect more letters of explanation, verification of employment, obviously, and just if you are considering refi, just know that it's going to take quite a bit longer just because of the amount that's been in the queue and is currently now increasing.
Right. Yeah, refinances, anytime that there's a dip in interest rates and the refinance demand is high, there's always going to be a little bit lag in a turn time. And we just set up our customers up front about it. Like, hey, we've got all the documentation in. It's going to take a while to get underwriting, but you'll hear from me, each step of the process. Regarding purchases and timelines, we're still meeting 30-day closings, even some faster. Yeah, absolutely. Depending upon the product. If it's something, again, one of the non-QM stuff that we've got to broker out or, again, doesn't fit the box, that's a little bit different, but we're still hitting turn times. And now it's much as important as ever to make sure your borrowers get pre-qualified first before they're out looking for properties. So all of this documentation and verifying can be done much sooner in the process. So we're not waiting, at the last hour to take care of that stuff.
I really appreciate your input. I know it's just a brief overview, but for those of you who may be considering refinancing, maybe an investment property at this point, you seeing opportunities, or first-time buyers or upgrading or whatever, if you have anything that needs to in the mortgage industry and related directly to real estate, Cindy is your go-to. She's reliable, she's ethical, she's amazing. She will find the loan that will work for you. So Cindy, why don't you share your information and contact? And of course, you can always get it through me, but please share with my audience how they can reach you.
Sure. So best phone number is my cell now at 949-291-3663. And then email is always good too. It's Kramer, so CKRAMER @GRARate.com.
Thanks, Cindy. And I think your input has been so helpful, not only for me, but I'm sure for everyone. There are loans still available. The mortgage industry is alive and well. So if you have any questions at all, want further explanation, please call me at 949-306-1405 or check in with Cindy. We look forward to sharing another Zoom meeting and update in the near future, and make it a great day. Thanks, Cindy. Appreciate
you bet.
your time.
Thanks so much.
Okie doke. Bye-bye.